if I have somebody that calls me and says they want 15% interest, I say, hey, that's fine, but I'll probably never use your money. And if I have somebody that says like 5 or 6% interest fixed for the year, I'll put them in houses all day long. On this video, you're gonna look over my shoulder while I talk to a private money lender about investing in a project of mine. I raised $50,000 at 8% interest on this call, so you do not want to miss this one. The cool part is I'm gonna stop and start the video. I'm gonna give you all the strategies, all the techniques, everything that I use, why I said what I said the whole time. You're gonna hear my scripting, you're gonna hear my tonality, you're gonna hear everything. I've raised over $150 million for real estate deals, and this is an inside look that I've never shared before on exactly what I do. Enjoy. All right, I'm gonna jump right into it. This is the call that I'm doing with a guy named William. Okay. And oh, by the way, another caveat, you might see I'm like a little bit younger, less gray hair and skinnier. This was in 2020. It might be 2020. This was in 2020. So this is right during the pandemic. The real estate, the stock market was like going crazy, just to give you some context of when this was. So, okay, here we go.
Yeah. How's it going, man?
Good. How are you?
Doing well. Doing well.
So it's been a long time since we talked.
I know. How have things been?
Been good. How have things been with you?
Good. Overall, very well. I appreciate you asking. I moved over further from Pensacola. I'm in Panama City Beach area now. So,
okay. So let me see if I remember. I am, yeah. Let me see if I can remember our conversation. You were like coaching tennis at some point. So you were just getting into real estate or thinking about getting into it. Do I have that right?
Correct. Yeah. That was actually my first. That was my first pig meeting ever.
Okay.
And I had met you, which was pretty cool. So
what just like catch me up? What's happened since then? It was probably, what was it, like a year ago or a little over a year and a half?
Yeah. So I started working with some wholesaling groups.
So in the beginning, just to pause this real quick, I'm just building some rapport. I'm trying to catch up. I did a little bit of research about him beforehand just to remind me of who he was. And then I started with like, hey, let me, because I wanted him to kind of be a little bit impressed that I remembered who he was and the conversation that we had and things like that, which I did remember, but a lot of times I might need a quick refresher, do a little bit of research about the person before I jump on the call. So just building some rapport, asking him about what's going on, catch me up, and then we'll get into it.
I was doing some acquisitions for them, learned a lot, which was awesome. I actually sold my tennis academy, and then I was really interested on new construction. And so I was finishing up my MBA and applied and got I just do quality assurance and logistics for new home development with D.R. Horton. And so I've been doing multifamily as well as single family. And so that's kind of where I'm at right now. But because there's a caveat in that, I can't do outside new construction, but I can do renovations and rehabs. So that's why I just purchased my first home, and I have a good amount of equity in it. So I was like, man, I don't know if I should do private lending or if I should just do like a cash out refinance because rates are so low right now, and start and do a project, because it's not a conflict of interest because it's not new construction if it's a pre-existing build. So
okay, so part of your employment says that you can't build new houses, but you can do renovation projects.
Correct.
Okay, cool. All right, well, let's talk. Like, it sounds like you've jumped into real estate, so you've got a background in a lot. Okay, so real quick, so he caught me up on what he's got going on, and what you're going to see me do now, which I think is really important that a lot of people don't do, is I'm going to say, okay, so it sounds like, so I heard this, and this, and then it'll be like, is that right? And let him say yes or no. So I'm going to say, I've heard, and you're going to hear me do this multiple times throughout the conversation. I'm actually going to just say, all right, let me make sure I heard you correctly. And then I'm going to cover it and let him correct anything that might be off. And so you're going to hear me probably 2 or 3 times throughout this. I'm going to do that. And the reason why I'm doing that is because I want to make sure that I'm touching on the points. I'm like reading it back to him and touching on the points and maybe the direction that I want to take this conversation, or allow him to correct me and just say, oh yeah, I got that right. So somebody might say, I really hate the stock market right now. You're going to hear this coming up. And when I review it, I'm going to say, so it sounds like you're really frustrated with the stock market.
and let him say yes. So I'm kind of ingraining that into the conversation so that I can tie back to it later. So these are the things that I'm pulling out to potentially tie back to later.
A lot of that stuff. So you understand like the terms and flips and wholesales and all that stuff. And you've done a little bit of all that. So, and you're just trying to decide whether you should lend money out or do it, like figure out how to just take that cash and go do it on your own.
Yeah, because I have been I've been working, and then I've saved a lot of cash, and I was also like, man, I would love for my money to work for me as well. So when I saw your post, I'm also interested in private lending too. Wasn't sure if you were managing accounts and what your risk tolerance was, what kind of capital you're trying to raise. I did have a few different questions because I was interested. Sometimes I get lost in YouTube. And the other day I was just looking up private lenders and trying to figure all of that out on how I could get started. And there's so many different people. So I was kind of interested on what you were doing.
Cool. Hey, well, so before we talk about that, let me just.
Okay. So this is perfect. First of all, do any of you ever feel like you get lost in YouTube? Like there's so many people talking about lots of different stuff. So that's kind of where he's at. It's pretty typical, right? And then he said, I'm interested to hear about what you're doing. Can you tell me a little bit about what you're doing? And so I would say 99% of you would start saying, oh, well, I'm flipping houses. We're doing 3-bedroom, 2 bathrooms, cosmetic renovations. I'm looking for some private money lenders who can fund that project for me, or do a first position mortgage or second position mortgage or something like that. And I'm offering like 10% interest or 12% interest or 2 points and 12% or like whatever it is, right? You would go into what you're doing and what you need. What you're going to see is I'm not going to do that at all. I am going to gather all the information that we need. So this is the culmination of all 5 days of this training that we've been through, right? So you're going to see everything that I talked about before. I am going to go gather that information. The only thing that I know right now is he says he's kind of saved up a lot of money. I don't even know what a lot of money is yet, right? And so you're going to see me take a right turn. He wants me to tell him what this is like, private lending and working with me and things like that. And a lot of you might be, without this training, you're baited into doing that. But I'm not going to do that. I'm going to make a right turn, and I'm going to just keep going back to the questioning. So watch this.
Understand what some of your goals are, like where you're at in life, what some of your goals are. You said you saved up some cash, you got some equity in your house, you sold your tennis company. Like what does all that look like? Like where are you? What are you looking for? Like what would be a win for you coming out of a relationship like this?
Yeah, a win for me would be eventually to develop some mailbox money. I would love to have a large rental portfolio, or just the start of a rental portfolio, and eventually be able just to free up more time. I know right now I'm just in a learning curve, understanding new construction, and it's a vastly different industry than just when people say real estate. I mean, there's so many different intervals that kind of people get stopped and blocked, and you're like, oh wow, you can do new construction, rehabs, fix and flips, you can wholesale, you can just do residential, you can do commercial. I mean, there's so many avenues. So for me, I'm trying to keep straight, keep understanding new construction, but I would love to eventually be able to free up my time and be able to work on my own time, because I know how to run all these projects, but essentially everything is down to a deadline for shareholders, because D.R. Horton's a publicly traded. So I know a great amount of project management, so I would love to just be able to do it on my own, in essence, and then take those and then eventually rent them. That's a broad I guess a broad goal, but a goal nonetheless.
Okay, so right now it sounds like your time, you don't have a ton of time because you're working pretty hard. You're learning, and eventually you're looking for some more passive income, like mailbox money and stuff like that.
Yeah, that would be ideal.
What about in the short?
Okay, so you hear that? And by the way, if you're just jumping on, I know people are jumping on as we go. I'm going through a training a recording that I did with a potential private lender. His name is William, and I'm breaking down exactly what I'm doing and why. So what you saw here was he said mailbox money, right? And then I'm tying back. So what I heard was, and I was like, so it sounds like you want mailbox money, and he's like, yes. And so, and the reason why I did that, to the point that I made earlier, is, in the future, I'm going to talk about how private money lending can be mailbox money, right? So he's deciding, do I want to build up this rental portfolio? I want mailbox money. So people that want mailbox money, they think they might want a rental portfolio, but they actually just might want just the returns from private lending can be just as good, if not better, because they don't have to deal with tenants, toilets, and all the problems, right? So I'm going to probably tie back to that later. So
Short term, like what about, so you said you've got some money saved up right now. Are you looking to do that soon, or like the money that you would invest as a private lender, if that is the route that you went, would that be like short-term plan until you can free up some more time or figure stuff out, or are you looking for
Yeah.
something long term?
I'm not opposed to either. I guess it would depend on terms, and what I guess what the return is, for each plan. I have a lot. I have money mostly in long-term investments, in the market, and right now isn't a great time to sell. But with that being said, I guess it would just depend on terms, really. If there's a opportunity, obviously with a less return, but it's a short amount of money, which is what usually private lenders do. I'm okay with being a little risky if that was the case. But long-term is my goal. I would love to eventually build a platform to where I can have a number of rentals and, be able to do flips on my own time, oversee projects, hopefully do one or two a month, ideally. And then I'm sure as that comes, I can get in more of a mindset that you guys have, where you're doing that 10 times over. But at my current, I'm still, I'm 26 and I just turned 26. So I feel like I want to see the big picture, but also I don't want to fall short and then get disappointed. I'm okay with a long-term step. And
I'm going to pause this right here for a second. If you notice, you can see it in the video, I'm actually like writing down a ton of notes. So I'm just writing down everything that he says, and I'm doing it right now. It's just like it's a habit of mine. I'm pulling out these bullet point words that he's saying, right? So here's what he said. There's two things that I just wrote down. He said, not a great time to sell. So he's like, I know it's not a great time to sell his stocks, right? So that's one thing. The second one was, I'm okay being a little bit risky, right? Okay. So what I want you to get from this is, number one, where my mind goes when he says it's not a great time to sell stocks. It's not whether it is or isn't a great time. It's why does he think it's not a great time? So I need to figure that out, right? And then when he says I'm okay being a little bit risky, I'm not like, oh, okay, he's willing to be a little risky. Is it like me risky, or is it like my grandmother risky? Because those are two very different riskies, right? So I want to figure out, how does he define risk, right? So these are two things that I wrote down that I'm like, okay, these are to-dos for me in this conversation to come back to. Make sense? So when you're talking to these folks, a lot of times what I think, like early people that are having conversations about money and things like that, you're like, oh, they're okay being a little bit risky. And you use your definition of risky. You don't figure out what their definition of risky is, because everybody's going to have a different one. And they're like, oh, it's not a great time to sell stocks. And you're like, oh yeah, I agree with that. Like, I don't agree or disagree. I just want to know why he thinks that. And then I'll find a solution for what we can do with his portfolio. All right, let's keep going.
And taking it step by step, which is kind of why I took this job here with D.R. Horton, so I could learn, all the way from getting the slab ready to closing the deal with the homeowner.
Well, that's awesome. I'd say, first of all, you're an incredibly young guy, sold your company, doing some cool stuff. I've already jumped into real estate, multifamily, single family stuff. So pretty impressive. I'll say that. So you've got a lot of time ahead of you to let your money work for you and get to that point, right? So
yeah, thanks.
Okay, so if I understand, so you got some money in the stock market, not a great time to sell. Your long-term goal, obviously, do rentals and flips on your own is the hope. So
that would be ideal.
Okay, so what can I tell you? Like, how can I? Let's see. Where's the money now? So you said you've got some money inside of your house in equity.
I'm just gonna pause it real quick. Did you notice? Like, I almost said, all right, let's talk about the opportunity, but I was like, wait a second, I don't have enough information. And what you're watching right now is you're watching like you're watching like right where you are. I was still like, I've had so much experience since the last 5 years. If I was critiquing myself, I was like, I just messed up. But you can see, like, I caught myself. I was like, uh-oh, I don't know where his money is. I don't know how much money he has really. I don't know what percentage rate he wants. I don't know if he wants monthly payments, balloons. I don't know if he wants, I don't have enough information yet. I almost went in to kind of the close or opening up, this is how we work kind of thing. And then I was like, wait a second, I got to go back. I don't have enough. So I'm like mentally going through the script that I built 5 years ago that has now raised $150 million or more. And back then it was like, I don't know, I probably raised $3 or $4 million by this time. So you can see like baby Bill starting to, you can see right there, it was just like that glitch in the matrix a little bit, right? Where I was like, uh-oh, I got to come back to it. So I'm just going to highlight that. I'm not giving myself a hard time, but you can see how much change and experience can happen over just a couple of years. And that's exactly where you're going to be in a few years if you commit to this. All right.
Equity that you could pull out on a refinance or did I hear tap into a line of credit? Or you haven't set that up yet? It's just something that's sitting there that you have some availability to.
Correct. I haven't set up a HELOC or anything. But
and then is everything else in the stock market?
A good majority. Since I was 18, I just started maxing out my IRA, and then I just would put money into a separate account with ETFs, mutual funds, and some. I really don't do day trading or anything. It's just set up with a guy from Edward Jones that I've known for a long time. But I mean, he's done okay. Even through COVID-19, I didn't take drastic loss. I mean, it was impossible not to take losses, but he forecasted some good moves, and it didn't kill my portfolio, thank goodness. But
okay, so with you having been through the first 4 days, I want you to think about, is this guy a cautious Claire? Is he a balanced Ben, or is he a sophisticated Sam? So just write that down on your notes right now. Just kind of pick who you think he is right now, and I'll kind of come back to that towards the end probably. But I was going through like, do you have a HELOC right now? The reason I asked that is because it takes time to set that up, right? You can't just but if he already has one, he could draw from it today. And then the stock market. And then he said the magic 3 letters, IRA, right? So wrote that down.
With the amount of money that I have with Edward Jones, they allow me to tap into instantly, like next day wire, 65% of my portfolio at a 5.5% interest. It's not ideal, but also that was a thought that I might have if I wanted to fund my own project. But then with that, I'm just really curious about private lending and how you're getting started, or also I wanted to ask, I wasn't sure how many other accounts that you actually run currently, or if this is a new part of your business.
Okay, so IRAs in the stock market, ETFs and mutual funds with Edward Jones. You're saying you can tap into 65% of your portfolio without selling it? They'll give you a loan on that at 5.5% interest?
At 5.5% interest.
And that money continues to work in the market?
And the money continues to work in the market. It's kind of interesting. It's just available to students. So when I graduate, that's not available anymore. I guess it was to get the SEC passed this deal to get more young investors, I guess, was the idea behind it. But that's actually what I did whenever I put my down payment on my house. I took a loan out on the money that I had, put that money down into the house, put it into the house until I was up enough to where I could sell and it wouldn't hurt me. And then I bought back that loan, and it worked really well. I think I paid like $230 versus I would have had to pay thousands in trading fees. The way we just waited about I think it was 11 days to when one randomly back in January when the market went up, like spiked like 600 points in a day. So things were good, and then I sold, and it worked out good for me.
Okay, so he's telling a little story here, but what he's talking about, so I had never heard about this, I don't think, when I listened to this, when I did this call, but I've used this many, many times, and it's a huge, huge, huge tip. It's called security-based line of credit. So if let's say somebody's got $1 million in their stock portfolio and they don't want to sell their stock, they don't have to. A lot of times they can get up to 50% of their portfolio on what's called a securities-based line of credit through Fidelity, Edward Jones, like he was talking about, places like that. And they'll actually give them a loan. And he was saying he can get up to 65% of his portfolio without selling his stock at 5.5% interest. So if he turned around and made 12% on that and didn't sell his stock, and the stock's going up or down or whatever, but he can borrow at 5.5% and lend at 10 or 12 or 8 or whatever. So now that 5.5% is what I wrote down, right? Because he probably doesn't want to sell his stock. He said it's not a good time to sell. However, it might be a good time to take a loan against his portfolio, right? So that's called a securities-based line of credit. Huge pro tip for you in the future when you're talking to somebody who has a big stock portfolio. All right, let's keep going.
I thought that was pretty neat.
So you mentioned it's not a great time to sell in the stock market. What do you think about that? Why do you say that?
I haven't quite made up the losses that I incurred when the market went crazy. I I'd like to at least get it back to where it was. And it's so volatile. I mean, it's up 300 points a day. Yesterday it fall 600 points. Day before it's up 1,100 points. I mean, it's kind of crazy, but I would eventually like it to come back to where I was prior to coronavirus or COVID-19. Sorry.
So, okay. Well, I'd say if we had this conversation like 2 months ago when it was completely in the crapper, I would totally agree with you. It's probably not a great time to sell. The interesting thing that I see is, I remember when my money was there and it was just moving up and down all the time, just like that roller coaster you just described over the past like week. It was hard to watch for me.
I had to delete the app. Like I don't have an automatic login. I'm just like, okay, this is a long-term investment, I suppose. But a lot of guys from Pig, Pig was great. And then I did some other seminar courses and that really opened my eyes. I'm looking to go in October to Orlando to your event. I was just checking it out yesterday. It looks awesome because I haven't done a flip. Even though I know every inspection, everything that needs to happen. I mean, D.R. Horton is a production builder. So since January, I've built and completed 39 homes, like all the way to CO to where it's we get a certificate of occupancy. It's just so fast. I mean, in the amount of homes, like right now I'm building 27 homes at one time.
I'm going to pause it here just because I want to go back to something that I said. I was trying to see where it was going, but when he said I said it's not a good time to sell. Kind of, I may have agreed with that then, but what do you think about now? I'm trying to get his take on it. I'm not going to convince him or try to convince him that it is a good time to sell. I'm just trying to understand where he's coming from. So I might just, and that's when I brought up like, I had to delete the app off my phone. He was saying like, I hate watching it. So now I'm hearing, okay, he doesn't like the ups and downs and the volatility. So maybe I can tie back to this in the future when I'm presenting the opportunity of private lending because he's still in the educational phase of it. So all right, I'll let him keep going. He's talking about, and if you're just joining us now, what I'm doing is I'm going through a training that I did with a guy named William, an actual call that I recorded behind the scenes with a guy named William, who was interested in investing with me as a private lender. He didn't know he was being recorded. It's not staged. It's not scripted. It's just listening to me go through it and breaking it down. All right, let's keep going.
Time, and I was overseeing about a $10 million project, and at the end of the year, I'll probably make. I essentially, now I know, and I want to preface this. I know I made this deal to learn, but when I signed that paper, I took like a 1.5% return. Like I'm going to manage a $10 million deal. You're going to pay me well, but it's so stressful. I mean, 27 homes at one time. My goal is to build and complete 100 homes this year versus I could do 2 or 3 homes and probably make the same money with way less stress. And I could probably, ideally I could get other contractors doing the work, and then I could just take smaller pieces, and then I could free up my time. And I guess that really rolls into the long term. I'd like to do some flips and then be able to buy maybe in cash a rental property and then start my portfolio that way. And that's just going back to that question you asked me a little while ago. I just like I'm in my truck right now to take a 30-minute phone call, and then I'm just looking at all these people running around the job site right now.
Yeah, no, I
So you're hearing like challenges and issues and problems, right? I'm just like, okay, writing it down, like just trying to understand. What I'm trying to get is I'm trying to get the big picture of what he's got going on so that I can present an opportunity for him if I see that we're a fit.
I know exactly how you feel. You are like echoing the sentiment of every single foreman on any new construction company, period. I think the burnout rate is pretty high on most of those folks. And I do think it's a good plan to see the ins and outs of it. And I think you have a good view on it of, hey, I'm learning here. Like they're paying me to learn. Right. And then what can I do with that skill set afterwards on my own potentially, or wherever I want to go afterwards. And you don't know what that looks like. So, okay. Well, I just kind of wanted to understand like what the goals are. I know you're incredibly young and you're obviously hungry to get into the game and do some of this stuff. And private lending was one of the things that I started doing very early on in my career too. I had saved a ton of money. And so I was like doing a flip, and I was buying some land, and I was wholesaling a deal, and then I was lending some money out of my IRA. I was doing all of this stuff too. And what I kind of realized was I needed to figure out what I wanted to do, like in all of it. It's like you said, you can get lost on YouTube. You can get lost at, RIA meetings, at seminars, at courses, stuff like that. So really kind of focusing on what you want to do. And for me, I have kind of moved from flipping to then to wholesaling, and now pretty much all that company does is wholesale. And then I do a lot of private lending now. I have a CFO that I lend out my money. I have a large insurance policy that I borrow against to loan out money. I lend out of my IRA and 401k, and then I also lend my personal cash. So I have a HELOC on my house, and I lend that money out too. So I'm
Really?
in that same boat. I do a lot of lending, and only recently have I had the capacity to do a lot more of it. And so
Gotcha.
when I work with people who, and I don't broker any money for other people.
So right now you can remove that if you're not doing lending. So I'm just giving him kind of proof of concept. Like I use my HELOC. I talked about the life insurance policy because it's a lot like his securities-based line of credit that he was talking about. So I mentioned that because I borrow money from my life insurance policy. I pay interest back to the policy or back to the insurance company, and just like he would on his stock market portfolio. So if he wanted to ask me more about that, I could tell him how I did it and how he could do it. And so that's kind of why I mentioned that. And I'm about to get into the fact that he was mentioning like, I don't know how many people you're working with their money. Like I'm brokering money, and I'm just like, I don't broker money. So
people, like some of the stuff that you mentioned, it's not, I don't have like funds or anything. Usually we just raise money for my company, Blackjack, for the flips that we do and projects. And then I also help some people raise some money for multifamily investments. So
Cool.
I'm putting a lot of my active income into some of that multifamily investments now, so I can make some passive income and also reduce my tax burden. So get a bunch of depreciation. So there's a couple options that I can talk to you about what we do and how we do it. And at the end of the conversation, like anybody that you work with, my recommendation is just to make sure that you're very clear on your goals and what you want to do with your money, and where it's going to come from, what it looks like, what kind of return you're looking for, and just make sure that it matches up with their goals. Because some people are going to want really cheap money, some people are willing to pay a lot more. You mentioned risk. All of that stuff kind of comes in play. It's kind of like a risk and reward go hand in hand. There's an inverse relationship with, if you talk to a newer flipper that doesn't have a lot of experience, they may pay a little bit more interest and be really excited to give you a huge return. But as a private lender, you really want to be concerned about the return on your principal. So the return on your money, your capital first. I could tell you that I'll pay you 100% interest and you might jump all over it, but I could default on the loan or do something stupid. So I want to make sure that.
So what I'm doing right here is I have some experience. So I was kind of laying some landmines for potentially if he talks to somebody else who's a little bit newer. And if you are newer, then you just remove that section. You don't say like, hey, so I'm able to say what I was doing is I was positioning myself as an experienced flipper that I think you should, that's a little bit more safe. I'll never say safe in the conversation. You'll see this. I'll never say safe, but it's just a little less risk. So reduced risk for him, which means that also comes at a reduced interest rate. So hopefully you are picking up on this. I'm kind of setting the stage for a conversation potentially in the future about interest rates. If he's like, I want 15%, I'm like, well, maybe that new flipper could do that, but I definitely can't. So that's kind of some things that you heard right there.
That I can just explain some of the things that we do with our lenders. But usually I like to spend more time trying to figure out what your goals are, what you want to do, what like picture perfect looks for you, like how much money you're working with, where it is.
Okay, right here. Perfect. So it sounded like I was going to go into, this is what we do, this is how you can invest with us, but I didn't, right? I don't have the things that I need yet. I don't have the amount of money he's working with. I don't have the interest rate that he wants. I don't have the timeline. I don't have any of my 5 items that we talked about all week. I don't have any of it yet. So now's where I'm going to go get it. But hopefully you saw that transition. It was like, hey, I can tell you a little bit about how we work and I know we'll get there. But first, I really want to understand exactly what your goals are, maybe some of the amount of money that you're interested in investing and the kind of returns that you're looking for first. Sound good? And so it's a way to do this a little bit later in the conversation instead of going for that right in the beginning where we're just getting to know each other. We're building some rapport. So here we go. Let's go get all that information.
Like what the mindset is behind where you want to be. Because if you want to start your flipping business or a rental portfolio where you want the capital back in a year, then that's a very specific type of investment with a company. And it's more on the short-term fix and flip type loans than it would be on a commercial project that's like 3 to 5 years, where you're looking at, and some people want a bunch of depreciation up front and some people want cash flow. And it's a little bit different. And some people want like a monthly payment and some people are better on a balloon. So IRA money and then your regular cash, your taxable income and taxable money is kind of 2 different buckets. My IRA, I don't need cash flow in my IRA and I don't need depreciation in my IRA, but I do like to build the net worth via my IRA. So I want the principal balance to go up over time. So all that stuff's kind of handled a little bit differently. Let's say you were investing as a private lender. Like what are you comfortable investing with someone, anybody, me or anybody else?
I guess it would depend on the terms, the return, and what the project is really. I was listening to what you were saying. So you have a clear understanding of my goals, but I definitely don't have as much capital as probably a lot of guys you speak with. Equity in my home, I have about a little more than $75,000, and then in the stock market, as of 2 minutes before I started talking to you, and the day is about to end on trading, it was right at 73,000. And then just in my personal bank account, I have about $18,000, and I make, with my bonuses and things, anywhere between $6,000 and $8,000 a month, just depending on how busy we are and how many homes I finish.
So you won't always get somebody that offers up the exact amount of money that they have, but he does. So he felt comfortable with me. I got him to a position where he's like, oh, okay, this is what I've got, right? And he even's like, I don't have as much as I think, most of the people you probably work with do, but he just started talking about it. And so they might say, and so I say, what would you be interested in investing? That's kind of like a bridge to get there. And then he just volunteers it, which is great. If he didn't volunteer it, I'd say something like, well, we probably need to get into like the amount of money you're considering investing so that I can see if it's a fit for both of us.
So with all of that being said, I guess I wouldn't mind putting $50,000 towards something if I knew that for me personally, I like the fact that you're not taking a lot of different partners, if I'm understanding you correctly, because I feel like like you said, there's just a lot of different views. If it's building capital with 8 to 10 people, I feel like that's a lot easier to manage than 50 people, of course. And if that means giving up more money to have that, I'm willing to do that.
You mentioned that you had an IRA account too. That's I'm assuming that's just in the stock market. It's not like a self-directed account, and you're pretty young, so it's probably not that big.
Correct. It only has about $22,000.
And did you include that in the amount that you said in the stock market, or is that separate?
I did. So it's about 50 by itself, and then 22 in the IRA.
Okay. And then my assumption is like you've got the equity in your house is something that would have to get tapped into with a HELOC or a cash out refinance. The stock market is something that can get a loan against or can be cashed out. The IRA would need to be transferred. What about, like, I'm assuming your emergency fund is what you have in the bank account, right? Like if a tree fell on your house tomorrow or you had to fly for an emergency, that's what you set aside in your structure.
Correct.
Okay, good. Because I always like to cover that with people, because the last thing that I want them to do is pull out their emergency fund to invest and then 2 weeks later make a phone call and say, hey, I need my capital back.
Right. No, that's that's why I keep just personal money in my account.
And then so the goals right now is kind of mailbox money. So I'm assuming that unless it's the IRA, so the IRA is probably fine to accumulate, and the rest of it would be something that you're looking for.
So I'm going to critique myself a little bit here. I keep saying I'm assuming. I wouldn't say that anymore. It's not something that I would say. I would actually directly ask them. So I wouldn't say I'm assuming that whatever, I'm assuming this. I would say, is this blank? Am I right to think that this? And then I would stop and I would let them respond. Okay. So right now that last sentence, I kind of I'm assuming was in the middle and I just kept talking. That's a mistake. I definitely should be asking direct questions to get direct answers.
Like monthly payments, or are you good with the income that you make right now?
I'm good with what I make right now.
So building up the principal is the main focus of what you want to do.
Yes.
Okay. Are you good? I heard some wind.
Okay, so right here, I'm asking him if he wants monthly payments or if he's good with just the principal. Like he said, he made 6 to 8K a month. It sounds like he's fine. He doesn't need cash flow, but he did say before he wants mailbox money. So I'm kind of trying to understand, do I need to pay him monthly payments or not? And so he says he's good. And so now but he also sounds distracted. So he's got something else going on here. Oh no. Oh,
I do. And that's,
I'll take care of this. Takes like 5 minutes. Whenever you guys are moving in, is that all you needed? And then I'll change the locks out for you. Yes, sir. Thanks. Sorry about that.
That's all right. Are you good?
Yeah.
Okay. I don't want you to get yelled at on the job here.
No, it's okay.
All right. So I got the picture. I understand where you're at. And what do you want to make on your money? Like, what does that look like for you? Like, what are you making right now in the stock market and feeling comfortable about? And then what would you want to make on an investment?
Well, last year was awesome. I had my best year was 2017, which I know will not be match, which was 25% on my money. That was just a crazy year. But last year was 17% return, which I know is super high. And I'm not expecting that, especially if it was paid out in quarterly dividends and things like that. But I think a realistic return would be 8 to 10%, but I'm not sure what you guys are offering and how large the initial buy-in is and things like that. So
the cool thing that like my approach on everything that I do is we don't like offer anything unless if I'm going in with somebody on a multifamily building and they have a specific like preferred return and an offer, then I do. And that's like predicated with anybody that I work with to help them raise capital for a project they're doing. But in my company, like I talk to the lender and I want to find that win-win. Like I want to find out what they want. And the structure that I do is I basically just have like a list of lenders and I say, this is how much they have. This is how much they're willing to invest with us. And this is the percentage rate that they're looking for. And then I go up and down the list. So if I have somebody that calls me and says they want 15% interest, I say, hey, that's fine, but I'll probably never use your money. And if I have somebody that says like 5 or 6% interest fixed for the year, I'll put them in houses all day long. Gotcha. Like every day of the week, their money is working every single day in the company. So
I hope you heard that. This is a multi-million-dollar line right here. Okay. Multi-million-dollar line. I have a list. So I put people on it. So what I did was I just bracketed him between 5% and 15%. So, and you can adjust those. Like I adjust those numbers over time. Now I might say like, if you want 6%, I'll use your money every single day. And so, because he was saying 17%, 25%, he's throwing all these numbers around. So I just bracketed him between 5 and 15% based on my list, right? The list of people. Even if you don't have a list, even if it's the first lender you're ever talking about, you might want to use that technique. I brought people down from like 15% down to 7% using that exact line right there. And then also I said, well, what are you making in the stock market now? I say that every time that I'm talking to an investor. What are you making on your money now? You know, and what do you want to make? And what does that look like? Because remember, I got all of his frustrations and all the things he hated about the market and all the concerns he had and deleting the app and checking on it. And then he said, you know, as of 2 minutes before this call, so he opened it up and he looked at it 2 minutes before this call, his balance. So this guy's on top of his money, right? He's watching it. All right, let's keep going.
So that's kind of the structure that maybe I'm a little bit different than some, but I really like to make sure that I'm making the lender happy. And if they want 8% or they want 9% or they want 10% and that's where they land, then I can tell them, you know, hey, here's a project that we have coming up that I can put this much money into. Here's the structure that we can arrange for whatever we have coming up, and I can put their money in there. And then when that project's done, I tell them where they are. And if they're like, hey, I want my money to work 12 months out of the year every single day, and I say, okay, well, to do that, here's what we need. And that's the structure. So it's not necessarily like I'm offering something. I really am more concerned about building a good relationship and make sure that you're happy with the return that you're getting.
That's awesome. That's cool. I like that approach.
So, okay. And so let's say we did do like a $50,000 investment on one of the houses that we're doing or something together. Like, what does the timeline look like? Because it looks like you're either going to need to move some money out of the stock market, or you're going to have to figure out the equity, like tap into the equity of the house, which I don't know what's best for you, but obviously something you have to consider. I will say that the interest rates are extremely low right now on our home. And, but you also have you'll have some fees and stuff to close a HELOC or something like that. So.
Right.
So what does that look like? Like, what does that timeline look like for you, do you think?
24 months.
No, I mean like for you to have access to any money. So like if we were to do a deal together, like tomorrow, you're not like wiring $50,000. So what do you think that looks like? Is it like a month from now, 2 months from now?
A month.
Okay.
I'm going to critique myself a little bit too here. I don't think I understood the securities-based line of credit well enough, because he actually could send that money almost right away. Now he's only got like $50,000 in stocks outside of his IRA. So he could probably get 65% of that money, right? So, and then the HELOC and stuff like that. So I kind of screwed this up. I feel like I probably should have been like, well, how quickly do you want to do a deal together? And he's like, let's do one tomorrow. And I'm like, okay, well, how are we going to do that? Let's talk about how we could do that. Would you mind if I helped you a little bit in trying to figure out how to move $50,000? And I'll give you some advice. And then I would have said, let's start working on a HELOC. You got to give him some referrals for that and start helping him set that up, a second position HELOC probably, or his securities-based line of credit, and just kind of talk through some of that, or moving his IRA to a self-directed IRA, kind of talk through that. So there's a couple things that I would do now, knowing what I know.
Okay.
Yeah.
All right. And then working together for like, I heard 24 months. So is that like, hey, and probably like, I don't mind tying up this money for 2 years and letting it work like that for 2 years and see how it goes.
Yeah, that's okay with me.
Okay. And then you said something about quarterly dividends. So I know when I initially mentioned it, you were talking about having something where I want the principal to grow, like the balance to grow. I don't need the cash flow. Are you looking for interest in a quarterly or monthly payment or something like that?
Unless it was a larger project, I wouldn't mind. Like I would have to know what it would be in.
Yeah. So like if it was on if it was on one of the properties that we did, like a fix and flip, then it sounds like you wouldn't mind if we did like a 6-month note with a balloon or something, that you wouldn't mind taking all the principal and interest at the end of the project.
Yeah, I wouldn't mind that at all.
Okay.
Okay, so he sounded like a little wishy-washy. So I was just like, well, what about this? Would you do this? And he's like, yes. And 6 months, I was 6 months at that time. I would highly encourage you to do a 1-year note. Now, if you're doing a promissory note, maybe a 9-month promissory note to stay out of the SEC guidelines and some of the things that we teach inside the mentorship program with some of the legal stuff around money and what we can and can't do and things like that. But so maybe like a 9-month or less note on a promissory note, and then mortgages, no real big concern on mortgages and deeds of trust. So, all right, let's keep going.
Okay. And then what about like, what's your comfort level with security? So like, there's basically 2 ways that we can work on a deal together. One of them is secured with a mortgage. So we have a promissory note and a mortgage. And so that is basically like, it's a bit of a challenge with $50,000, but it can be done. So it's like, let's say we find a house for like 60 grand, and you come in and put a mortgage on it, and then we put the rehab costs in, or we raise some money for the rehab costs. And then when we sell that, we pay off the mortgage. So you're probably familiar with that. So there's a first position mortgage on it, or a second position mortgage, depending on what the deal looks like. And then the other option that we do is a promissory note against the company. So the other option keeps your money working like all the time. So what I do sometimes with people who have a little bit lower capital like you do is we bring it in and we use it for like rehab projects and the money that we use to renovate the houses. So like, let's say I have a $150,000 house and it needs $40,000 of rehab. So I'll bring in a lender at $150,000 on the mortgage, and then I'll bring in your money on the rehab, and I can use that like over and over and over again over that year or those 24 months. And I don't have to attach it to a property. Now, the upside of that on a promissory note is that your money's working every single day. And the potential downside that most people feel is like, how important is security to them? Like, do they?
Okay. So people ask me all the time, how do you position a promissory note, like an unsecured note? And I just did it. You guys just heard it. So go back and listen to that a couple times, or like hopefully you wrote it down. Like, think about it's like, you're lending directly to the company, but your money works every single day, things like that. There's the benefits, right? I think I flopped this risk a little bit. Like, it depends on your security risk, things like that. I wouldn't do this today. I wouldn't say the thing I'm about to say, which is, it confuses him a little bit if I remember correctly. But I would say, I would just show the benefits. And then they might say, well, what are some of the downsides? And then I'd present it. But I mentioned the benefits. Here's the benefit of the mortgage. Here's the benefit of the promissory note. You decide which one you want to do.
Want to be attached to a property, or are they comfortable being attached to the company? Does that make sense?
It does.
Actually, I did a better job than I thought. So would you rather be attached to the company or attached to the property? So that's kind of the 2 ways. Promissory note attached to the company, like you're lending the company money. Mortgage deed of trust, you're lending the money on the project attached to the property. I actually did a really good job.
I don't have any attachment to the property.
Okay. So you care about the return and that your money's working all the time.
I do.
Okay.
I don't know if that was okay to say, or if I was supposed to say I would be attached. But if I'm not even working on the property, I would just rather my money be working. And then if that's the case,
No, I don't mean like you're physically attached to the property, like you're doing the work. I mean like the fact that we have a mortgage security on the property. So like security being like, if let's say this relationship goes south, right? And like we go under on one of our houses, like we lose money on it, or I don't pay you your payment at the end, then you can take the house and foreclose on the house. So that's where the mortgage comes into play versus a promissory note, which we use for smaller amounts of money, like a $50,000 investment, like we're talking about, to be able to kind of move it around and be more agile on how we can do deals and make money. And the downside of the mortgage, and I wouldn't say it's a downside, but it's only working when it's like we have a project going on. So typically there's about 9 or 10 months out of the year that money makes money because it's attached to a property. And when we sell one, we have to find the next one to move it over to. So it makes money when it's attached to a property. And then there might be a month that we don't have a mortgage on one of the houses. So we send it back to you, and then you send it back to us like a month later when we find the next project. And that's kind of how that structure works. And then the promissory note is just, hey, you lend $50,000 to Blackjack. We use it throughout the year. At the end of the year, you decide if you want to compound your interest, or end of year, end of 2 years, you decide if you want it back with interest, or if you want to compound it and keep going with us for another year or two. We just have another conversation. So those are the two structures basically of how we work with investors.
I would say there's some great parts of what I just did, and there's some parts that I would polish up, right? Some of the sayings of like you attach to the property or you attach to the company. But then I started like, oh, what if I don't pay you back? Then this happens. That's kind of, just erase that stuff. Like bring that stuff up. If they bring it up, you talk through it. But you don't want to inject uncertainty in the mind of the prospect while you're doing something like this. So, I mean, if they ask, or I usually would, I'd rather do like an example of something that could happen or has happened in the past, and then back that up with success stories from me. But don't even inject that stuff. I started like weaving in confusion there. Confused mind always says no.
Does that make sense?
It does. I appreciate you taking the time to explain that to me.
Yeah, I will say that that's the biggest kind of thing to understand when you're working as a private lender is what kind of security do you want? And my recommendation, if you're working with somebody who's new, is, and anybody really, like a lot of times what I usually do is I usually bring the first person in on a mortgage, get them comfortable with us potentially, and then they decide if they like signing the satisfaction of mortgage, they like dealing with all the paperwork and notarizing documents before they send them back to us to close, or if they just want to be completely hands off and get passive money. So most of my lenders come in and they'll do a mortgage or two because they want the security, and then they'll call me up and say, hey, if I can just like give you this money and you use it all the time, you pay me back at the end of the year. Maybe we do quarterly payments. Maybe I balloon it and I compound it. I don't want to deal with this stuff. You go do what you do, what you're really good at, and just pay me my interest. And I say, okay, you got it. We'll do it. And so then they come back on a promissory note when they're comfortable. So no pressure either way. Like either one is 100% fine. We go kind of in both of those directions with our lenders. And so you don't have to make a decision now. It can be something that we talk about as you think about what we're talking about here.
Okay. Do you have any like active, I guess, do you have any return portfolio paperwork on any active projects that you have, or anything that you're building capital for currently, where it would be the take a mortgage? What was it called? A reverse mortgage? Is that what you said? Or
no, just a mortgage. Yeah, so like a first position mortgage, just like you have on your house, right? You got a
just
loan
like a
on your
normal
house.
mortgage.
Like you're the bank, right? You're the bank that has a mortgage on the property. If anything happens, you can foreclose on it, right? So that's the structure. You just become the bank for that house. And you underwrite us, you underwrite the deal, you look at it and say, okay, I'm willing to lend on that property. We try to keep people around 65 or 70% of ARV, of the after repair value. That's it. We have that kind of leverage on the property. We don't put them up at 95%, anything like that. So we're forcing the appreciation and equity in there. So like, are we, I'd say the only kind of gotcha that we have is we'd have to find a project that's pretty low cost. We'd have to find something in Pensacola that we're buying for like $50,000 or $40,000 to put a $50,000 first position mortgage on it. Normally a first position mortgage is somewhere around $100,000 to $150,000. I'm not saying that we couldn't do it, because we certainly can, but you might be more of a second position mortgage, like where you have a second on it for the rehab costs or something on a property with 50 grand. So it's something like, I'd say this is an entry conversation that we're having. I want to make sure that you're comfortable. I'm going
to pause it right here. You can see like that one little comment of a confusion entered in like 6 minutes afterwards, right? Of trying to understand, backtrack. I'm sitting here like, man, did I just confuse him? He's clearly confused. So we want to try not to do that. It would have been great for me to just say, it's kind of like being the bank. You're the bank. When you buy a house, you mentioned you bought a house, the bank made the mortgage, you pay the bank, right? And instead of paying our monthly payments, what we do is we just accrue the interest over the 6-month or 12-month period. And then we pay you back all the principal and the interest when we sell the property. So just like being the bank. That's simple, right? Like, oh, okay. Yeah, I understand that. Try not to enter in all this. I was using a lot of industry jargon, a lot of words like ARVs, mortgage, first position, second position, like all this stuff. And he's like, reverse mortgage, like he's confused. It's just, it's kind of, I'm not perfect. Okay. Obviously. So there's a great call, but there's a couple areas where I'm like, should have probably done something a little different. That's one of them. All right. But we're wrapping up here, and I'm about to get into the thing where I say, look, we don't have to make a decision now. This is an entry-level conversation for us to just get an idea if we're a good fit to work together. I know where he stands. He's somewhere around 8% interest. We could probably do 50, maybe even 70K. He wants a balloon. Like, I've got all the things that I need to figure something out. He asked a buying question. Do you have a property that I can invest in now. So he's interested to move and do this.
I can share a couple things. You can do some more research on us as a company and stuff like that. And now that I know where you are and what you want to do, I can bring some opportunities to you going forward.
Well, I really appreciate that, Bill. And I know that Jen had mentioned you were headed out of town, and I don't want to take any more time, but I really appreciate you taking the time to educate me. I feel a lot more comfortable. Like I said, I kind of got lost in YouTube. There's so many different people, so many different opinions. Yeah. But you were actually the first person I subscribed to for deals, and
awesome.
I actually had a realtor when I was still in my undergrad, I believe in 2015. Yeah, 2015 that had mentioned about you guys. It could have been 16. I'm not sure. How when did you start in Pensacola?
Yeah, it was like late 2015 that I started getting my business going.
Okay, yeah. So it could have been 2015 or 2016. It was a realtor. His name was Mitch Adcox, and he's like, "Hey, you really need to check out this guy, Blackjack. I mean, he's got some awesome deals." And I was still really young at that point. But as I've gotten older and just seeing how you've really 10, maybe 20 times your business in 5 years is just outstanding. And now you're hosting seminars, and it's really cool, especially because I lived in Pensacola and I've met you personally. And it's not just some guy on TV or whatever they're trying to pitch you. So that's cool. It's a cool success story to know someone, you know, to have a conversation like we're having now, but also previously about a year ago to shake your hand and meet you. I mean, it's just real neat. So
well,
hopefully
I'll tell you, William, the biggest thing, like whether we do business together or not, like this is the conversation that you should be having with anybody that you're considering lending money to. And you should really think about who you're going to do business with. Because I can tell you from experience, right. I've done some private money loans before and they haven't gone very well. I've lost money, and it's because of the person, not the deal. So really be careful about who you're working with, whether it's us or somebody else, and where you put your money. You've worked really hard to get here. You know, this is, it could be anywhere from half to a third of your net worth. And so really think about it, and don't just jump into it just because it's anybody. So, regardless of who you work with, I'd say vet them out, take a look, try to figure out what they're doing, and if they're the right person to work with. Like, can you trust them? Because this is a big thing. And I would recommend, as you get going with somebody, to potentially start with a mortgage-backed security, like a mortgage on a property, especially if they don't have a big track record, or they're offering you like a ton of interest and making an offer. They should be presenting things kind of the way I did, like, what do you want? And how can we match up my goals to your goals? Not, this is what we're offering. And you're like, whoa, that sounds awesome. 2 points and 15%. I'll take it. Because the return on your $50,000 is more important than the interest return on your $50,000. So the return of your $50,000 is more important than the return on your $50,000. That makes sense?
Definitely.
And I treat your money just like I would treat my money or my parents' money or my grandparents' money. So it's really important to me. We've lost money on deals before, and the lender had no idea, because we lost $70,000 on a deal and they made $50,000. So we've got a good track record of working.
All right. I know that was insanely powerful. I wish that I got to see something like that when I started raising money. The amount of money that I raised by now in my real estate business, over $150 million, probably seems insanely overwhelming, but it started with a conversation just like that, the first $50,000. And if that's where you're at, that's totally fine. If you're scaling your money raising, I can help you there too. I have a training that I do all the time. I do a 2-hour masterclass. I do 5-day challenges. We'll put a link to that in the description here. And then also, I want to give you my script. So I have a script. It's a few pages long. It's exactly what you just heard me go through, but then you can print it out. You can actually put it right in front of you as you talk to potential private money lenders, and you can iterate off of that as you need to. So I'll put that in the description, totally free. Thank you for being here. And if you think that was great, let me know in the comments your biggest takeaway. Just let me know. I don't know, Bill, you're a money-raising genius. Say something in the comments for me. Subscribe, share this with a friend, and I hope more people get to watch a video like this so they can go out there and raise money. You're capable of doing it. I believe in you. And subscribe, like it, hit the bell to notify you of next videos, and I'll see you on the next one.